Welcome everybody to our Lunch and Learn workshop today with BankOZK. We are here to help you master your money by learning more about the difference between banks and traditional banking accounts versus those apps that you use on your phone. FinTech or financial technology apps like CashApp, Venmo, Chime. They are increasingly popular. We see a lot of our clients using these apps and even relying on these apps for their day-to-day financial management, their money transactions. So we are excited to learn more from our guest experts and to empower you to master your money. So I'm going to hand it off to Ashton Schwalinski from BankOZK to tell us what we are going to cover today.
Thanks, Julia. So today we're going to cover just what the difference is between a traditional bank and what FinTech is. So one of the questions that people ask a lot is, why do I need a bank? You know, you might have CashApp and you can go online on your phone and do what you need to do. But in the instance that you need to physically walk in and get cash, or your card quits working, who would you call? That number is really hard to be able to reach someone. You don't have just a person that you can talk to and they can help you. So that's a really important reason to have a brick and mortar bank that you can locally walk into. You know someone, they know you, and you're able to see them face to face. Online banks, they can be convenient, but again, you don't have anybody to connect with, to talk to, and sometimes you just need to sit down and run what you're trying to accomplish by a banker and let us help you provide solutions. And that's what you really get with a physical bank. And plus, you know, we have a lot of different options as to where a lot of the online banks or fintech companies, they just have their standard products and procedures, and nothing changes around there. Plus, they don't have the security. Things get hacked a lot, especially with Cash App or PayPal, Venmo. We see it every day, and unfortunately, it's becoming quite common with scams. So having that physical bank, we have, you know, the extra added security, and it protects your money and your privacy as well. There are several different types of accounts, and we're going to go through and talk about those today. But just to kind of scratch the surface, you know, you have your normal just checking and savings accounts, which is what most people are, you know, familiar with and know what they are. But we'll go into a few different types that we have with that and explain those to you guys as well. Deborah?
Okay. The different types of checking accounts that we have several different types. Now, first of all, moving on to the inform how money is insured, is that where we are? Are we gonna?
Yes, ma'am.
All right. Okay. The money is protected by the Federal Deposit Insurance Corporation, which is FDIC. And you're insured up to $250,000 per account holder, per bank, per relationship. So what we do is we make sure that your money is insured, and we make sure that we get the relationships correct, because you can be insured for more than $250,000. Just depends on the relationships that you have on your account. And what do you need? Basically, all we need is your driver's license or your ID card. A second form, if you bring your ID card, bring us a second form of identification, either your Social Security card or some proof of where you live. And what programs are available? As Ashton said, we have checking and savings accounts available. Those are the most popular. We have special checking accounts to meet all different needs, because we understand things happen and sometimes you need a fresh start. So we do provide different types of checking accounts. And what programs are available? We do have Okay, we've got what do you need for your bank to protect your money? You save for the future, receive and send money, and save money. We can do all those features on all of the different types of accounts that we have. Next slide, please.
So,
Okay.
how your money is insured. So through a bank, we have what's called FDIC, which stands for Federal Deposit Insurance Corporation, and we're backed by a government guarantee, and they actually insure your money. So we have requirements, for every dollar you put in, we have to make sure that we put it back, and also they make sure your money is insured. So if for some reason a bank ever failed, you are insured up to $250,000 per account holder, per bank, per ownership category. So there are ways to get additional coverage based on beneficiaries on your account and things like that if you get above that $250,000. But just know that your money is safe in our bank. You're not going to lose your money, and we have things in place to be able to protect you. Now, if you go with a credit union, they have something that's similar to FDIC, but it's actually called NCUA, so National Credit Union Administration. They are under similar, they have guidelines and regulations, and it is very similar to FDIC as well. So your money is insured on the $250,000 with them as well.
Hey, Ashton, can I ask a quick question?
Absolutely.
So can you explain a little bit more about how insurance relates to scams? Is it the same thing as like scam protection on your account, or is this different?
No, it's different. So this is more so there are other regulations that protect your account from scams and losing money for falling for things like that or not getting products. But this specific for FDIC insurance, it's if a bank were to fail. So if you think back like toward the Great Depression when people lost their money in banks or things like that, was kind of put into place because of all that, so that when you put your money in there, your money's safe. And if for some reason a bank were to fail, you would get your money back still, so that it doesn't just go away, poof into thin air. So that's what this protects for that. As far as the scam or fraudulent activity on your account, we have different regulations that cover you. And depending on whether it's an ACH, which is your bank and routing number coming out of there, or a debit card transaction, there are different ways to dispute those, and your bank works to get your money back on that.
So how is this the same or different with a FinTech app in terms of like if Chime or Venmo were to go out of business, like what would happen to any money?
You're just going to lose your money with them. The same for a scam. They don't work for you like a bank does to get your money back in those situations. And especially if someone gets you to send it to them as like friends and family, or them, then your money is gone and there's no way to get it back. Versus where we have several different things. One, we have a fraud department that monitors all the time. So if it's something out of your normal, we're going to call you and we're going to verify that transaction before we pay it. Two, if you do have something that comes through, then we're able to dispute that, and we work to contact those places and get your money back where you don't have to do it. Versus FinTech, they're basically going to say, oh, I'm sorry, there's nothing I can help you with. And that's if you can even get through to someone, and most of the time, unfortunately, you can't get through. They want you to send an email or talk to someone, and it just puts your information way out there further for more scams or issues happening or you losing your money.
Yeah,
and I just want to add on to what Ashton said. With some of the other FinTech programs, if something happened and you are scammed, you have to wait for that card to come in the mail, and then your money, if you need your money, the money you don't have access to, because you're waiting on them to send you a card in the mail to replace the one that you had, and that can be an inconvenience.
Yeah,
so are you talking about more of like a prepaid card that's compromised, or are you talking about even if it's a Venmo or something like that?
I know CashApp they have a debit card. Okay, they have like a debit card.
Mhm.
And if something happens and that card is compromised, you want to turn that off as soon as possible and get another one. And I don't know if, and Chime is another popular one. That same there. If something happens and the information is compromised, you're waiting to get a new card to replace your debit card, basically.
And
Versus
Deborah,
with the bank, you can walk right in and be able to get your debit
Right.
card printed here same day, and be able to use your funds again. You don't have a waiting period, and we don't charge you to move your money around.
And Deborah, adding on to what you were saying with the debit cards, most of those, if they want to use CashApp or any other secondary app or anything like that, they're all using debit cards. They don't link accounts. They link by cards most of the time. So if they don't have a card, then they don't have access, period.
Right.
Gotcha. Thank you. Let's move on to the next slide here.
So, like we've talked about, there are multiple ways to bank. In person, you have a local branch. You have people that get to know your name and you get to know them that you can call at any point in time. You have ATMs around, maybe the town for sure, or the state. Some banks are in multiple states. We can print your debit card immediately upon opening the account, and also print you one at any point in time if you were to have fraud and have to cancel your debit card. And you can walk in and deposit money, or go to the ATM and deposit money, so it's in your account ready for you to use at any point in time if you needed it. Versus online, you can sign up anywhere, and that is convenient, right? That's what typically draws people in. And usually, they don't charge fees for certain things. But I will say that most banks, there's a way around most of the fees. They work with you to make sure that the account is a well-fitting account for you and where you're at in your financial life. And then with the online, you do have to, if you have an issue, can't call, and you have to just make sure that you're paying attention to your stuff, because you don't have someone monitoring that for you. It just automatically lets stuff go in and out. But most of the time, the bad thing is you have to have a direct deposit that's going in there, because you can't just deposit cash. And also, if your employer doesn't offer a paper check, that could be a problem. And some of them, you have to have a bank account to be able to link CashApp or Venmo to that, or a debit card, so that you can use it that way too. So it really requires extra steps for you in that instance.
So I know that some online banks offer more competitive interest rates, especially on their savings products. So what would you say to somebody who's just interested in saving? Maybe they already have something that works for them for their everyday checking and money in, money out. What would be the pros and cons of opening a savings account with your local bank versus going to an online bank?
So sometimes they do offer, a higher interest rate. Again, you have to be able to transfer that money out of a bank account somewhere to be able to put it over into that online bank. But two, if you need immediate access to your money, say you have an emergency and you need it, it typically takes 1 to 3 days for it to get back into your checking account for you to use it. Versus where if you needed it immediately at a brick and mortar bank, you're able to walk in right then and get your funds out to go pay for your expense, or get a cashier's check if it's a large dollar amount. So yes, the interest could be higher. And, if you know that you don't need that money and you can put it away somewhere that earns a higher interest rate on one of the online banks, then that would be a good idea for you. But if you need to be able to have like your rainy day fund, $1,000 you can walk in and get out if you have a flat tire, or you have an unexpected expense, it's really good to have a local bank to partner with. That way you're able to walk in and get your hands on that cash, or get it out right then when you need it.
Thank you.
And you also want to go into the office and sit down. That personal care to just do a financial checkup, because every situation is different, and there may be other products and services that your banker can possibly help you with that might be beneficial to you. As just opening it online, you won't get that personal attention, and you may not be in the correct product.
Yes. So again, when we're talking about the online banks or fintech companies, there is benefits. Sometimes they offer that you can get your payroll funds up to 2 days earlier, but we are seeing where some employers, they don't offer direct deposit. And in that instance, that's not going to work for you very well to get your payroll earlier because they're not direct depositing it in there. So then you have to figure out how to get your money in that bank. Some of them don't offer any overdraft fees. So that is something that, we try very heavily to explain everything into detail for you. And sometimes people do have to use their overdraft, but we make sure that we explain it up front, what the fee is going to be and how to get the least minimum amount of fee if you were to need it. So that if you're having to be in overdraft all the time, that might be the better option for you. But, most people, I think we try to educate them and teach them how to save and put their money back so that when they have an unexpected expense, they're able to use their own funds than having to borrow against their overdraft protection. The fintech, they typically don't offer or make you have any minimum balance. You can open your account with any amount. And sometimes there's no foreign transaction fees. So if you're doing a lot of foreign transactions, there could be fees on that, through like a traditional bank. And again, like you said, the higher interest rates on some of them, they do offer that. But again, who are you going to call if you have an issue? So there really is good and bad with either one. And sometimes that looks like you have both. Maybe it fits your criteria to be able to use Capital One online only for a high yield savings account, but you have Tabitha here in Conway that you can walk into and talk to her at any point in time with your checking account. So if you have any issues, you have someone to ask for advice and guidance. Now there is limits on your fintech cards on how much cash you can withdraw one time, and those are pretty strict limits. So you could have difficulty getting large amounts of cash off of those cards, and sometimes if there is fraud, they will lock your account down where you cannot get access to your funds, and you are unable to just walk in and get a new debit card printed. So if the mail system, then that 7 to 10 business days really ends up being 3 to 4 weeks for it to actually get to you. So that delays your access to your funds as well. And again, it's not FDIC insured. So your money, if they go out of business or they fail, your money's gone. There's no protection there on that. And they don't fight for you whenever you have fraud on your account.
Another quick question here. I know in the past, if you had a debit card, whether it was a prepaid debit card or maybe like a CashApp card, you could pretty easily withdraw cash whenever you were purchasing something, at Walmart or Kroger or something. You could also get cash back. But it seems like in more recent years, there have been increasing fees related to those point of sale withdrawals. Is that still pretty much the best option for people who want to withdraw cash off of their FinTech app card or a prepaid debit card, or are there other options for people who want to withdraw cash?
So I think with the fintechs, usually they'll give you like a free ATM withdrawal so many times a month, maybe. But then the ATM you're using is also going to charge you a fee. So there's really good and bad. So you're going to pay a fee either way to get money off of that card. To my knowledge, there's no way to have anything free at all. So you really just have to weigh your odds. Like, do you need to be able to pull out cash? Are you using a lot of cash? And I will say with just your normal everyday going to Kroger or whatever, they are not giving as much cash back. Used to you could walk in and get $200 cash back from Walmart. They've put limits on that now. So you can't get as much cash back with them. And typically they charge a fee because they're being charged a fee by their credit card processor for giving you cash back.
Yeah. I know for many young people, and even like my husband, he just never carries cash anymore. He just is moving totally towards a cashless sort of transaction system. So how important do you see it being now and in the future to have access to cash, whether from a bank or from a fintech product?
So say you're somewhere and you're using your debit card and your debit card declines, it doesn't work. What are you going to do if you don't have a backup payment method? And that could be another card or it could be cash. I know sometimes when you're going and paying for services, especially small businesses, cash gets better deals. So I do think that no matter what, it's important to be able to have access to cash if you needed it. Whether that be through FinTech or going, through your regular bank, it's just a lot easier to get cash if you have a regular brick and mortar bank to walk into.
Thank you. All right.
Deborah, you want to talk about deposit products?
Sure. We have several different deposit products. Can you check? What's your next screen? I'm sorry.
Sure. Let's see.
Now we have several different products, but there's you have the checking, where you can deposit money, make purchases, pay bills, access money. We have the savings account. Also, it's designed for saving for a rainy day, saving for the future, and you earn interest on that savings account. And then we have the certificate of deposit. It's a higher interest rate, but there is a longer term for commitments. And there's usually specials that banks have for the certificate of deposit. It's either 7 months or 13 months. And I want to roll back to the checking account because on the last class we had a question, several questions. They were asking about special products if something happened in the past and say you had an account that charged off. Most banks have a product that they may be able to open for you to get you back on the right track, to get your direct deposit going in. And we do encourage you to, if you had that charge off, to make arrangements with that bank and get that paid off because it follows you wherever you go. But there are products out there that will allow you to open a checking account, maybe, and get back on the right track so you can have your debit card and take care of your everyday life. And then after a certain period of time, that special checking account that you have, it can be changed to one of the other products that might be a better fit with no service charge.
Deborah, I know we have a slide later on bank on accounts, so we can circle back to some of those
Okay.
products for people who have had trouble with banks in the past.
Okay. And credit cards, lines of credit, installment loans, mortgages. Most banks have all of those services available. It's different rates. That's when you would need to go in and talk to a personal banker to see what fits you best. See the products that we have. Because, all banks have different products and services, and it's getting you to the one that works best for you.
So I have a question about this. I know I got a notification from PayPal recently because I have a PayPal account that I was being issued a PayPal credit card. And I know that some people that have CashApp, you can very easily get a credit line with CashApp. And they may or may not even review your credit as part of that application. It's just part of having an account. You get access to a credit line as well. So what are the differences between having a credit card or a credit line through one of these FinTech products versus having a credit card through a bank?
So I would encourage everyone to go and pull their statement and look what their interest rate is on those cards. Most of the time they don't read the fine print, and whenever you're looking at it, they're charging you 30 to 35% interest on the money that you're using if you're not using it and paying it off every month. So when we're talking about credit cards especially, you want to use less than 30% of your balance. You don't want to carry more than that. So if your credit line, is $100, you don't want to use more than $30. Because of that, that can affect your credit score. And even if they're approving it without pulling credit, which most of the time they do a soft inquiry at least, but they're giving you a lower credit line for that. And then if you're leaving a balance on there, you're paying so much money in interest, unfortunately. And you probably don't even realize it because you don't look in depth. They don't send you a paper statement to look at. They send you an email and say, hey, you have a statement, and you just pay your minimum payment or $100 and go on about your day. So they really don't talk to you about how to utilize that card for your benefit and how you're able to build your credit while using the card. With coming in the bank, you know, what we look at is here's how to use that. Get a credit card, buy gas with it, an expense you know you're already going to pay, turn around and pay it off every month. That way it shows that you utilize it and then you're paying it back and you're not leaving a large balance on there and then you're not paying interest on the credit card. Now, with lines of credit, it's a little different because usually sometimes they have an unsecured line of credit, but then so if you have like PayPal credit, I know that's an example, that's a line of credit. So you utilize it and then you pay it back. And I think now they're offering a card on it. Used to, they did not. You could only pay through PayPal and use it. But you can also like use your home if you own a home for a home equity line of credit. So you can use it for like home renovations or if you have an emergency expense kind of as a safety and security. And then the interest rate is a lot lower because you are using something as collateral and securing that. So there's pros and cons to both, but I really think that the main thing is when it's online, we don't look at all of the documents and no one explains it to us. So then you just don't know exactly what you're getting yourself into.
That's right.
Let's move ahead here, if we could, to the Bank On slide here and talk about options for people who have maybe had a bad experience with a traditional bank in the past.
So there are several banks that offer this, but basically what it does is you don't have overdraft. It doesn't allow you to have overdraft. It does give you a debit card. It works just like a regular checking account, but you have to stay in good standing. So it doesn't allow you to go into the negative. And basically what this does is it lets them watch you over 12 months to make sure that you're utilizing your bank account how you should without abusing it or going into the negative. And maybe it's that when you were younger, you made some bad decisions and you forgot, you know, you couldn't pay it back at the time. And so you had to charge it off. So what we encourage is, you know, take care of the bad that's on your credit, but also this helps you to build the good. So basically it's like a second chance to be able to get a bank account again. And typically you don't have to keep a high minimum monthly balance. Now, a lot of times there is a fee associated with these accounts, but it's usually for 12 months just to prove that you are going to keep this account in good standing. And then after that 12 months, typically they automatically switch it over to one of the regular checking account types because you've proved that, you know, you want to have a bank account, you are doing everything correctly, and you're not abusing the relationship with the bank. So it's kind of bank's way to give back to you and help, you know, maybe rebuild something if you maybe made some financial decisions that were not the best in your previous lives. And with that, you do usually always get online banking access. And we, you know, almost every bank offers what's called Zelle. So it's basically the same as sending money through like CashApp or PayPal or Venmo, but it is actually through banks and it's bank owned. So it's more secure and you do it through your online banking app where you're not logging into multiple different platforms and sharing your banking account information with different platforms. It's all in one spot.
And also with the Zelle, there's not a fee to send money, and the person you're sending it to, they don't have a fee for receiving it. So that makes a difference.
Great. So
yeah, and it's instant in your bank account.
Awesome. I know a lot of these banks don't necessarily advertise these accounts on their website. So if somebody wants to open one of these Bank On accounts, how would they go about doing that?
You need to walk into one of the financial institutions. It can be any of your choosing, but just walk in and ask them what options they have to help you be able to have a bank account. And so banks have a system that they all talk to each other through. It's called check system. So no matter where you go, they're going to run that, and it's going to show, if you had any negatives prior from any other bank. And at that point in time, that's usually when they're able to have that conversation like, hey, we can offer you, say you go to Simmons, we can offer you an affordable advantage checking account. Or if you come to us, we have our own product. So it's the same product, it's just named something different at every bank. But, when you have a personal banker and a person there, we're able to explain that to you in depth and tell you how it works, so you know everything up front and you don't get hit with any fees unexpectedly or not know what's going on.
And from my understanding, Ashton, you were talking about that many of these accounts do have a monthly maintenance fee, at least for that initial period. But my understanding is that it has to be under $5 a month to qualify as one of these Bank On certified accounts. So it is a fee, but it is a low fee, $5 a month. And hopefully you would be able to avoid a lot of other fees related to overdrafts or related to, cash transfers or whatever you're trying to do with FinTech products or other non-bank products.
Yeah, or even ATM withdrawals, because you get free ATM withdrawals as long as you're using the ATM that you are banking with that financial institution. So in the scheme of things, you don't really think about the fees, but the FinTech companies, even though they advertise no fees, they get their money one way or another. And typically that looks like you want your money in a hurry, and so you pay a little 50-cent fee here, there, $1 fee here, and it adds up. And most of the time it adds up to way more than the $5 every month.
Let's see. So how can having a bank save you money? We've been talking about fees here.
Yeah. Deborah, you want to talk about this one?
Sure. First of all, at the top, avoid paying check cashing fees. Sometimes you may want to cash your check. If you have a bank account, then you'll be able to do that. Avoid late fees on bills with auto draft. You can set up your automatic drafts with your account number and routing number. Will not have to buy money. You won't have to use, because cashier's checks and money orders can be expensive. And it's also the convenience of not having to go to the post office to get a money order, or if you're just cashier's checks, they can be they can be expensive as well, but it's the convenience of not having to go to take the cash, go to the post office, or go somewhere else to purchase a money order. And you earn interest. You have some of the accounts, savings accounts, you can earn interest and make money.
I just had an experience. I was reminded that even places like Conway Corp will charge you a fee if you pay your bill using even a debit card or a credit card. So not just late fees, but setting up an auto draft will help just minimize transaction fees in general, rather than paying with a debit or credit card.
That's true. And I know with Conway Corp, like you said, if you pay with a debit card, they do charge you. But if you have a routing number and a checking account number, they don't charge you for that. And that's basically setting up that auto draft.
Okay. So how much money are we talking about that it would save you?
Yeah, so we're talking about, not having a bank account. So a lot of places, if you walk in and cash a check, they're going to charge you used to be $2.50. Now it's usually like around $5 to cash a check. And sometimes it's a percentage of the check, depending on how much it is.
It's more. It's a lot more now.
Yeah, and some places are even $10. So it really just depends, each year between check cashing fees and money order fees. So money orders are usually at least $1. Some places they're more expensive than that, but they're at least $1. And if you buy 12 of those a month, or one of those a month or multiples a month, you know, you're looking at a minimum of $12 a year just in money orders for your rent. But individuals roughly spend $500, and that can add up to about $25,000 over a working lifetime. So I don't know about you, but for me, $25,000, that's a lot of money. And if I could save that just by saving a little here and a little there, then, you know, that helps me out in the long run and lets me be able to potentially retire earlier or be set up more financially, you know, when I do retire. But just kind of a little fun comparison, $500 in groceries is equal to 50 gallons of milk, 50 loaves of bread, 360 eggs. So that's an egg a day, basically. 30 packages of cheese, 20 boxes of cereal, and 40 pounds of fresh fruit and vegetables. So, you know, that's a lot. And if you have children, that's a lot of food that they like to eat. So that is just by having a bank and not getting all of the fees and knowing what the fees are up front so you can avoid those is a huge thing, you know, that can keep you and save you money.
Great.
Just talking about what you need. So if you want to walk in a bank and open a checking account, we're going to verify who you are. So we're going to need your social security number, a valid photo ID. So that could be a passport, a driver's license, just a state issued ID, but it doesn't have to be a photo ID. And then funds for opening an account. And typically that's between $25 and $50 that we require you to deposit in when we open that account. And that really is just to make sure you're serious about having a bank account. You can't let it sit at zero. If you let it sit at zero, you know, then it wouldn't fund itself and it wouldn't open. So when you're coming in, typically the process does not take that long. But what we're going to do is we're going to get to know you. We're going to ask you, you know, about your life, about your family, about you. What do you like to do? How can we help? What's your plan? You know, what are you trying to accomplish? Do you want to be able to pay your bills electronically? Do you want to be able to send money to your mom every month? What is it that you want to do? But then on top of that, we're going to check in with you every month, or, you know, in a couple days, in a couple weeks, the next month. Like, we're going to keep checking in and making sure that everything is going well for you.
All right. Ooh, I think that was the last slide.
Yeah. So overall, you know, there's a lot of different ways that you can bank. And really, it just depends on what works best for you. And if you've never ever had an issue and had to call or needed help with something, an online bank has probably been the way that you've went and you haven't had any issues. But I will tell you, eventually there will be an issue. And you're going to be very frustrated when you can't pick up the phone and call and have someone help you solve that problem. As to where if you have an actual brick and mortar bank, you are going to have a phone number to someone to talk to, a live person, and you're also going to be able to walk in and ask questions if you needed to. So there's good and bad with everything, but you do really get a lot of benefits from having an actual bank in the town that you live in that you're able to walk into.
Thank you. Do we have any questions from those that are in the room? Any questions for our bank experts? Giving it just another minute to see if any questions come in. You can type your questions in the chat, or you can raise your hand or just jump on in with any questions.
And Joya, can you see how many people do we have online?
Right now, there are 8 of us in the call.
Does that count?
Yeah, it looks like we have one person that is joining us live in addition to the people that are here from BankOZK.
Yeah.
All right. Well, I appreciate your time so much. I appreciate your expertise. It's really helpful to know that bankers are friendly and approachable and want the best for our community. So thank you so much for being here and sharing a little bit more about why banks are so important for a healthy financial life for people that want to master their money and make sure that they are protected in case of scams and fraud, have access to their money when they need it. It sounds like there's really a lot that traditional banks can offer that some of these fintech products just can never compete in those same areas.
Absolutely.
Yeah, so thank you so much. And we look forward to learning more from you at another time.
Thank you for having us. We appreciate it.